Financial accounting. This chapter we're talking about analyzing the financial statements and organizing them a little bit more clearly so you can quickly see what you're about. Now you'll remember the expanded accounting equation. Assets equal liabilities plus stockholders' equity. Well, that makes up the beautiful financial statement known as the balance sheet. And what we're going to be doing this chapter is taking that balance sheet and classifying it. So we're going to have a classified balance sheet. And when we have a classified balance sheet, that means that our assets are going to be sorted into one of four categories. We're going to have current assets, meaning assets that get consumed within the current period or within a year or an operating cycle. We're going to have investments, which are things that you purchase, you hold on to because you're hoping that investment will go up in value. We'll also have plant assets, also known as property, plant, and equipment, which are things like buildings, land, equipment that you use in your day-to-day business to what? Sell things and make a profit. And finally, the asset we'll have is called intangibles. And intangible assets include such things as patents, copyrights, in other words, intellectual property or good ideas that people have filed for and earn money because it was their idea. So those are the four kinds of assets. When we turn to the liabilities, we're going to have two kinds. We're going to have current liabilities. Those are the bills that you need to pay in the coming year or operating cycle. And then you're going to have long-term liabilities, which are those promises that you don't have to keep for a long time. In other words, for more than a year. So, for example, if we had a mortgage payable, you're going to have a current portion of your mortgage payable, which are the next 12 months of mortgage payments, and you're going to have a long-term mortgage payable, which is the mortgage that you won't pay for a while, after this coming year. Those are the liabilities. So how many assets do we have? 4. How many liabilities? 2. And then we have stockholders' equity. And you know what? You already know the classifications for stockholders' equity. There's 2. There's the contributed capital. That's the stock and its associated paid-in capital. And then there's retained earnings. And retained earnings, remember, is internal ownership, and stockholders or contributed capital in stockholders' equity is external ownership. So that's how we classify the balance sheet. When we turn to this retained earnings or revenue minus expenses, that makes the beautiful income statement. And we know that in this chapter we're going to learn there's 2 different approaches to doing an income statement. There's the multi-step approach, which has lots of subtotals to it, and then there's the single step. So we're going to be learning how to sort revenues and expenses, multi-step and single step. The other thing that we'll look at in this chapter is looking at the quality of the assets, liabilities, stockholders' equity, revenue, or expense by doing some ratio analysis. And we'll be doing some very simple ratios. I think we're going to do about 7 ratios that will look at profitability ratios, liquidity ratios, and then solvency ratios. So that's what you have in store this chapter.